morning, Peter here on behalf of Global Market Signals. And this is our quarter review for the stock market in general, the Dow, the S&P, the NASDAQ. We'll look at the TSX and the TSX Venture Exchange. And we'll do a separate video for the global stock markets. This video, or this chart, is a quarterly chart of the Dow Industrial Average. And we had this big correction, of course, back in the first quarter of this year. When we were looking at this closely, and I was writing about 18,200, I think was the low in the Dow, somewhere around there. We were looking for 18,500. That sort of, when you get into these scary moments in the stock market, things are collapsing, you don't know what's going on. You kind of need to revert back to these technicals and look at the big picture and see. This was a very logical, this was a high that connected the 1999 high, the 2007 high, logical that you pull back to this trend line. Also, the breakout from when Trump was elected, logical. This was a major breakout here at 18,000. I mean, these become very critical technical support. So the Dow, in my opinion, is going to remain bullish as long as you don't violate this trend channel. So at some point we will, but the support at this point is about 22,000. Any close below sort of this lower trend line going out into the future becomes sort of really critical to understand where, how far it might go down and where it might go down to. So for now, we're looking at this beautiful uptrend channel that is at least 10, 12 years in the making. If we go back, and I have these vertical dates on here for, when things happened, the financial crisis in 2008, although they make a big deal out of it, this candle, I mean, the market was going down for 4 quarters before all the hysteria happened in the fall of 2008. It had already played itself out. So for the most part, and the majority of the decline was in place because your real high was in October of 2007. So we had this quarterly 6 quarters in a row where we had a down market. Now, as we pull back in time, you can see many, many other things that sort of happened on this chart and see where the Dow has come from. And we had the October 87 crash, almost doesn't really look like anything. You have, the Plaza Accord, and you look really on a big picture chart, and you see, well, where did all of this craziness start to go happen? When it was the Plaza Accord, where they agreed to devalue the U.S. dollar and basically created inflation that ultimately drove the Dow much higher, as you can see. Having said that, we also went through a period here, and I fully anticipate this will happen at some point in our lifetime, where you went 6,117 days with the market not doing anything. 6,200 days, 20 years almost, right? 65 to 82, nothing really happened. Nixon closed the gold window, had some big corrections along the way. This was very choppy. You had the highest interest rates here, 17, 18%. Actually, I think the peak in the 10-year was at 18 or 17% here, somewhere in 1980s. And then, we had the Vietnam War, which began. This was another leg higher here. And Bretton Woods, World War II, the October 29 crash. I mean, it's just fascinating to see all of this stuff all the way back to the 1890s, right? And the interesting thing happens if you look at this on a log scale. If you look at this on a log scale, this is unbelievable in terms of just how symmetrical these moves have been. All along you were running and you were maintaining these trend lines on a log chart, right? And they're very equal and very good to look at in terms of just sort of target support, target ranges for where things can move to, run to on the high and also on the low. Now these lines aren't really relevant because they weren't pushed on a log scale. So when I switch between log and a regular logarithmic scale and a regular scale, I'm skewing these lines. So, but regardless, you can see that we're still within an uptrend here on the big picture, and it's continuing its momentum forward. On the S&P 500, same sort of thing. Very, very beautiful channel here. Boy, going back, this is 1979. This period here, double top into 2007, 2000. Boy, this is a big bearish formation, but we bottomed here in 2008, never looked back. And same sort of thing. I mean, this goes back to way back. I mean, if we look, we have to kind of look at this on a log scale. This goes back to the 1800s, right? 1870s. Beautiful, beautiful. Look at this on the S&P 500. This is a quarterly chart going back to the high in October 1929. This channel is very telling of where we are today. Look at that. Isn't that beautiful and symmetrical? So, the S&P 500, I think, still can go higher. Does it mean that we can't correct back down? No, it doesn't mean that at all. I'm just saying that, if you just look at the technicals and you say, wow, this is a beautiful symmetrical chart. You're maintaining sort of these long-term sort of points of contact. I mean, yes, at some point, this bottom line will also be touched again, but it could happen 10 years into the future. Or 20 years into the future, you don't know. I mean, you went from 1949 to 1975 before touching that 25 years before touching that line again, right? It's possible. Who knows? Maybe it'll be 50 years this time. But at some point, you look at this and you go, we're probably have an unfulfilled target here on the upside of 4,500, maybe, depending, as this is a rising line. And the SPX, very possible that in the short term, you get a correction back down. We've run quite a bit here, so maybe you get a correction back down. You've got plenty of support here, 2,700. We're at 33.82. Retracement of 50% of this move would not be unusual. So if you run a Fibonacci on this and you say, where's the 50% retracement? 50% retracement is 28.97. That's the entire move. That's a logical support area. You could go to 61.8%. That's 27.34. You have to kind of see where everything's lands in terms of monetary, fiscal policies. The euro is going to impact this capital flows from Europe. Then if we look at the NASDAQ, same sort of thing. What weekly NASDAQ? Let's go to a quarterly NASDAQ chart. All the data. Boy, look at this. I mean, you tell me, where do you think this is going? I mean, this chart is kind of nuts, right? It's kind of one of these things where, boy, we could, in fact, go up even further potentially in the NASDAQ. It's hard to say. I mean, just remember this correction back down to here was an 80% down correction, right? And you could have some sector rotation out of tech at some point here. If we look at this on a log scale, a little bit different, view. I mean, we're pretty close to potentially a high here, but I mean, maybe we correct back down. Maybe we get sector rotation and the Dow starts to take off more so than the NASDAQ. Potentially even if we look at the Russell 2000, which is all the small stocks, mid-cap stocks, this is also a very, very interesting chart. It hasn't really broken out. I think you get some sector rotation. Maybe the small mid-cap stocks start moving again. You never really know. I mean, is it going to be Microsoft, Apple, Google, Amazon? I mean, this is a chart of the three of those stocks combined. Well, clearly, this is parabolic. I mean, this is greater than a 45-degree angle. My bet is that post-election, doesn't matter who gets in, these stocks are going to be hit hard at some point, and they'll most likely be split up in some instances, and there'll be a cry for more control of what they're doing. You just can't. I don't think you can have this go on. Because the public sentiment on this is just going to turn negative with these big companies the bigger they get. So that's something to keep in mind. If we look at the TSX, much more manageable, sort of reasonable chart. We still haven't taken out the highs, so I fully expect, this was about a 30-40% correction here, 37%, I think, peak to trough on this March quarter candle. We're probably going to take out this upper line, and then ultimately I would say, your target is up here on the TSX, in the next big rally, somewhere around 20,000. We're at 16,000. This is definitely not overbought in any way, shape, or form. So I think we're going to have some rotation. We need to see how this could be years out, of course, because these are quarterly charts. So these things take a long time to unfold, all these patterns, right? It's not measured in weeks or days. It's measured in years. The junior venture exchange on the Toronto Venture Exchange, I think this is phenomenal. This was a massive head and shoulders, left shoulder, right shoulder, head, neckline breakdown back in 2012. Double bottom, false breakdown, reversal candle. Next target is 850. Once you take out 850 on a quarterly basis, I think you'll get rotation back into the junior stocks, which could coincide with the rally in precious metals again. We've clearly broken the sort of this downtrend line, which was kind of, it was like a weekly kind of a downtrend line on a log scale. So we broke that. We're back. I mean, once we break up above 900, I think it's all clear for the venture exchange to go higher. And then basically it's just going to be a matter of looking at the currencies next to see how we think currencies might relate to these general stock markets. Until then, have a great day. We'll talk to you soon.